What would you do if everything you've worked for got destroyed? What would your reaction be? Not nice, I imagine. But losing your entire fortune is very possible. In fact, many people are experiencing this right now. Anil Ambani, once the world's sixth wealthiest person, is an outstanding demonstration of a billionaire whose happiest days are already behind him. Thanks to his sudden and dramatic fall from a $42 billion fortune to zero. You heard that right. Mr. Anil, the youngest brother of Asia's richest man, Mukesh Ambani, is now penniless. But don't just take our word for it, take Anil's. In 2020, he proclaimed himself a peasant to Chinese banks and notified a UK court that his net wealth had dropped to zero. And just in case you're worried about the guy, he's fine. But it's still a perfect example of a billionaire losing it all. But enough about losing wealth. Today we're here to talk about preserving it. Before we start, be sure to click the subscribe button and hit that notification bell so that you are always notified of our videos. Welcome to Ultimate Luxury. Today we will be talking about ways to avoid losing all of your hard-earned money and show you a method of how to keep it. Here are 15 effective methods to safeguard your wealth and avoid ending up like Mr. Anil. Let's go. Number 1. Manage your money well. This one is so evident that it has to be number 1. Think about it. How can you retain your riches if your financial planning skills are non-existent? You see, being good at handling your cash allows you to do more than just gain wealth. It also helps you to maintain it. Haven't you heard that earning profit is only half the battle, and preserving it is the other half? Now that you have, here's the thing. Outstanding financial management is quickly the most efficient way to control your money. Given, budgeting feels constrictive because after all, why would you quit the liberty to spend as you please? But don't plunge for the train of thought. With proper budgeting, you can keep ahead of your finances, which will help you to hold on to money that you have accumulated over time. Number 2. Boost your income. Don't come after me yet. I know you're starting to wonder what expanding my revenue has to do with conserving it. Well, let me tell you more. An extra revenue means you tend to not eat into your total wealth by leveraging into your savings, racking up debt, or getting rid of some assets. And on top of that, an extra revenue means more money to save and invest for even higher returns. Now let's get a little more practical and talk about how you can boost your income. You could start negotiating a raise at work, make profit from your skill as a writer, editor, presenter, or so on. Turn your hobbies and interests into an income-generating activity, or start some other type of residual income task. Number 3. Invest wisely. Yes, putting your money smartly is a good way to maintain your wealth, and let me explain why. If you start at a point B, sound investments will take you to point C, and as a result, you will not continue to stagnate at point B or worse, go back to point A. This is pretty basic stuff, and if you're not sure what wise decision to invest looks like, you can comment down below if you want us to make a separate video for that. Number 4. Diversify. Are you knowledgeable with Patricia Kludge's story? Patricia, a former heiress and model, was previously married to John W. Kludge, who was formerly worth $5 billion and was regarded as the richest person in America. Now this was in the 1980s, so around 1990, the duo separated, and Patricia received a huge payout of $1 million per year, having been bitten by the entrepreneurial bug. Patricia put a huge amount of her divorce settlement money into a vineyard, which had a brief run of success before tanking and ultimately costing her the vast bulk of her fortune. Patricia even had to sell some of her art and jewelry at the auction. So what's the moral of the story? Rather than placing everything with one option, distribute your investments across several, such as the stock exchange or property investment. As the saying goes, don't put all of your eggs in one basket. Number 5. Hire a good CPA and do what they say. Another fantastic way to maintain wealth is to stay ahead of the taxman. And what smarter way of doing it than by having an excellent accountant and tax consultant? If you don't recognize, a CPA has always been up to date with advancements in tax requirements and will recommend you on legitimate methods to reduce your tax liability. As a result, you avoid tax problems, which means you won't have to pay financial penalties that could eat up your total wealth. Number 6. Get insured. You may not have thought about it that way, but protecting your investments is an amazing means of preserving your riches, especially as global warming intensifies your home or asset properties are now at increased risks of disasters such as hurricanes, tornadoes, wildfires, hailstorms, or flooding. If you are covered by insurance, it will sting, but you'll be better taken care of. If you are really not, you could be left with a lot of losses, but a few alternatives. Number 7. Seek good legal advice. Rich people are in court every day. Yes, the adage about being isolated at the top is very often true. But what they presumably didn't tell you was that there are a lot of civil lawsuits at the top. Whether you like it or not, once you make it, you become a benchmark for your neighbors, former co-workers, and others, random people, your security staff, and so on. The encouragement is mostly a portion or even the entirety of your wealth, which is why you need to seek legal advice and have the right professional minds on your side. They will help you battle intruders and also guide you through business deals, and not to mention they'll tell you when to quiet down before your tongue costs you your portion of wealth. Number 8. Have an estate plan. If you need an incentive to develop an estate plan, consider these 5 benefits. Asset defense, a plan for prolonging your legacy once you're gone, tax advantages to support your favorite cause, and ensuring your family evades probate court. Aren't these all excellent ways to maintain riches? Number 9. Pick executors and trustees wisely. Conserving your fortune also basically comes down to who you choose to be a personal representative or trustee for your inheritance. You may want to use a member of the family because you feel as though you know them, but the judgment can turn out to be a dilemma because family members have their own preconceived notions that could jeopardize your decision. So to promote accountability, choose a specialist such as a lawyer, as an executor, or find a trusted competent to handle your trust. Number 10. Sign a prenup. That's correct. Having signed a prenup is yet another way to protect your fortune. Not to be pessimistic, but while a marriage may begin with all butterflies and rainbows, it may end in the dirt, with some name-calling and going for each other's necks or at least real estate. If you had a written agreement, you would have one less issues to worry about that during such struggling times because your property and financial assets will be protected. Number 11. Prepare a will. No one here really likes to think about dying, but it's unavoidable, and publishing a will should be a must. A will allows you to disseminate your resources upon your death according to your desires. And let me just give you a tip. If you want your funds to be handed down to your relatives, you must regularly update your will. Number 12. Keep tabs on your assets. The last issue you want is for your resources to be taken away from you since you don't have up-to-date paperwork or know how they're doing. Now you don't have to do anything exceptional. You can start with simple things like keeping copies of important records in a secure place. It could be insurance papers, bank account papers, retirement saving, property purchase papers, and so on. Having these documents organized and safely stored gives you a good grip on your fortune. Number 13. Have an emergency fund to preserve your wealth. You should save enough capital to afford 3 to 6 months of your family's expenditures in case you quit your job or are somehow unable to find employment. You should be constructing one that can cover you for even long durations, but by doing so, you will not jeopardize your personal fortune by having to sell off belongings, taking out loans, or using your portfolio funds to offset you. Number 14. Avoid naming your estate as the beneficiary of life insurance. Let me explain. The title of the nominee on your life insurance policy plays an important role in its tax liability. If you reference a person as the beneficiary, the insurance payout often does not rack up taxes. However, if you name your estate as the benefactor, the insurance settlement will be counted along with your estate's total value and imposed based on the combined value of your property. Now, which is the smarter choice? Clearly the former over the latter. Number 15. Be charitable. So how does making a donation on your capital assist you in preserving it? Giving it away seems counterproductive, doesn't it? Well, not precisely, and let me explain why giving away your wealth to relatives and other enables you to save money due to a security flaw in the US IRS. The IRS, or International Revenue Service, wants to charge a gift tax on hugely valuable capital such as a mansion, huge amounts of cash, and so on. But there's a restriction for this, and under that limit, you can give gifts without having to pay tax. In 2021, the gift tax threshold was set at $15,000 yearly for individual people and $30,000 annually for a couple. Any unutilized asset can be granted to a member of the family or another individual as a gift without having to incur any taxes. That brings us to today's question. What do you believe is the best way to maintain wealth? We enjoy hearing from each and every one of you, so please leave your thoughts in the comments. If you made it this far, here's a free extra tip for preserving your riches. Instill financial responsibility in your children. So there you have it. I'm not sure if you've heard the tale regarding Cornelius Vanderbilt, the shipping and railroad tycoon who died in 1877 and left a large portion of his $95 million fortune to his oldest child, which is now worth more than $2 billion in today's money. He also left smaller sums to all of his children, but it was the eldest son who did receive the majority of his wealth. He had his father's business acumen and multiplied his enormous inheritance in the years following his father's death, accumulating the biggest fortune in the world at the time. But within just a few years, his children and the Commodore's grandchildren had ended up spending almost all of it. So what can we take away from this experience? If you want your wealth to last for successive generations, you must teach your children about money. Now we're interested in knowing what other methods of conserving wealth you've learned from your own experience. Use the word wealth in the comments so we know who the true followers of our page are. Thanks for spending some time with us today. We look forward to seeing you next time. Be sure to subscribe to Ultimate Luxury, like, comment, and hit that notification bell so you can stay up to date on upcoming future videos. See you again soon.